Jake had always heard the same advice. Renting is throwing money away, buying is how you build wealth. His parents believed it, his co-workers repeated it, and every time Jake paid rent, he wondered if he was making the wrong financial decision. But in 2026, Jake discovered that the answer wasn't nearly that simple. One person could pay $2,000 in rent and sleep peacefully, while another could pay a similar amount toward a mortgage and still struggle with property taxes, insurance, repairs, maintenance, and other costs that never appeared in the mortgage payment. Jake began wondering whether the smartest housing decision was really about owning a house, or whether it was about what that house did to the rest of his financial life. So he started looking at different stages of renting and buying, from basic flexibility to expensive home ownership and luxury living. What he discovered completely changed the way he thought about housing. Level 1. Renting, flexibility, has value. Jake had just moved to a new city for a new opportunity. He wasn't sure whether the job would become a long-term career or simply another chapter in his life, so signing a 30-year mortgage didn't feel right. His apartment wasn't impressive, but the rent was predictable, and that gave him breathing room. When the air conditioner stopped working during the summer, he didn't have to find hundreds of dollars for a repair. When a plumbing problem appeared, someone else handled it. Most importantly, when another company offered Jake a better opportunity in another state, he could move without worrying about selling a property. He realized that his rent wasn't simply paying for four walls. It was also paying for flexibility, fewer maintenance responsibilities, and the freedom to change direction. At this stage of his life, keeping his savings available was more valuable than rushing into home ownership. Level 2. Rent versus first home. The mortgage isn't the real cost. A few years later, Jake's financial situation had changed. His income was higher, his emergency fund was stronger, and he finally felt ready to consider buying. He found a house he loved, and the mortgage payment looked surprisingly close to what he was already paying in rent. At first, the decision seemed obvious, but then Jake started calculating the full cost. There was the down payment, closing costs, property taxes, homeowner's insurance, maintenance, repairs, and the cash he would need to keep available after moving in. Suddenly, the house was much more expensive than the mortgage calculator suggested. Buying would also consume most of his savings. Jake decided to keep renting while building a larger financial cushion. He realized that buying a home could absolutely be a smart financial decision, but buying before you're financially prepared can turn a dream into a burden. Level 3. Long-term home ownership. Time changes the math. Eventually, Jake reached a point where he knew he wanted to stay in the same community for many years. His family had established friendships, his children were settled in school, and his career was no longer tied to moving around the country. This time, buying made more sense. Jake understood that home ownership shouldn't be judged by comparing 1 month's rent with 1 month's mortgage payment. Buying comes with upfront costs, ongoing maintenance, taxes, insurance, and potential selling expenses. But because Jake expected to stay for many years, those costs could be spread over a much longer period. His mortgage payments were also gradually building equity. He wasn't expecting the house to magically make him rich. He simply wanted a stable place for his family while slowly increasing what he owned. For Jake, the length of time he planned to stay became just as important as the monthly payment. Level 4. Expensive home. More house can mean less freedom. Eventually, Jake upgraded to a much larger home. It had a beautiful kitchen, a spacious backyard, extra bedrooms, and enough room for family gatherings. On paper, the mortgage was affordable. But then reality arrived. The roof needed repairs. The air conditioning system failed during the hottest part of summer. Property taxes increased, homeowners' insurance became more expensive, and routine maintenance seemed to arrive every few months. Jake still owned a valuable property, but his monthly cash flow felt tighter. He began asking himself whether the extra space was worth the financial pressure. The house had increased his net worth, but it had also reduced his flexibility. Jake learned an important lesson. A house can be a valuable asset and still become a financial burden if it consumes too much of your cash flow. The most expensive home you can afford isn't necessarily the best home for your life. Level 5. Luxury rent versus luxury buy. Where should your money work? At the highest level, Jake faced a completely different housing decision. He could comfortably afford an expensive home, but he could also rent a luxury property with a pool, gym, security, professional maintenance, and almost no responsibility for repairs. Buying would give him ownership, privacy, and the potential to build equity. Renting would allow him to keep a large amount of capital available for investments, businesses, or other opportunities. For the first time, Jake wasn't asking, "Can I afford this house?" He was asking, "Is this the best use of my money?" He eventually chose the option that matched his lifestyle and financial goals rather than trying to impress anyone. Jake finally understood that wealthy people don't always buy homes. Sometimes they rent because flexibility, convenience, and keeping their capital invested are more valuable to them than ownership. Jake's journey taught him that there is no universal winner in the rent versus buy debate. Renting can provide flexibility, predictable responsibilities, and mobility. Buying can provide stability, control, and the opportunity to build equity over time. But the smartest decision depends on your income, savings, local housing costs, mortgage rate, taxes, insurance, maintenance expenses, expected time in the home, and what else you could do with your money. In 2026, don't buy simply because someone tells you that rent is wasted money. And don't rent forever simply because you're afraid of a mortgage. Run the numbers. Understand the trade-offs, then choose the housing decision that gives your future the most freedom.